Hi guys, good morning, good morning, good morning, good morning, good morning. Hi guys, good morning. If you're watching me, I'd like you to type in the comment section. Let me know that you're hearing me and you're seeing what I'm doing this morning. You're welcome to today's live commentary for the dollar and foreign currency. If you're watching me, you're seeing my screen. Please type in the comment section. Let me know that you're seeing me. Let me know that you're also watching me. Let me know where you're watching me from. Good morning, good morning, good morning. You're watching me. Type your name and let me know where you're watching me from. Please don't forget to share this link to as many friends and group of traders that you would like to be a part of what I'm doing this morning. Do not hesitate to share the link with them. Let them join for what I'm about to teach this morning is very profound, and strongly believe that it's going to be useful to you guys. Okay, it's going to be useful to you guys. It's going to be useful to you guys. It's going to be useful to you guys. Type your name and where you're watching me from. If you're hearing me, also let me know that you're hearing me. And before we get started, quickly, just do this. Just do this. Okay, my friends. Okay. All right, great. So my name is Bala Francis, and I'm a professional Forex trader, and I help traders also find profitability in the trading industry. So yesterday I had an analysis with the private community, and we did our analysis for the dollar index and foreign currency, even though yesterday I discouraged the community from taking live trades because yesterday was the Trump inauguration, and as well we had seen that there's going to be a bank holiday on the US dollar. We saw that there was a US bank holiday on the economic calendar, forexfactory.com. So because of that, we couldn't take a live trade yesterday. However, just coming up to the chart this morning and seeing that all the assets I analyzed yesterday actually played to script exactly the way I forecasted that this asset is going to trade. It's amazing. It's really amazing. Coming to the charts this morning and seeing that, you projected that the dollar was going to trade into this level, and the dollar really traded into those levels. It's amazing. Okay, much more than, there's a saying that a successful trader is one who is more interested in making the right trades, because if you learn how to make the right trades, just then you can also make money from trading. Okay, so quickly, yesterday we did a top-down analysis from the monthly time frame, just to give you guys a recap of what we've been seeing on the monthly time frame. The dollar is currently bullish on monthly time frame because We see the candles on the monthly time frame very bullish, taking out previous highs and respecting the lows. It clearly tells us that we are in a bullish order flow. Overall, the order flow is bullish on the dollar time frame, on the monthly time frame of the dollar index, and we're targeting the drawn liquidity above here, the buy side liquidity pool with a fair value gap right above it. That's the hack for identifying drawn liquidity, old high, fair value gap above. So we're anticipating that this dollar is going to trade into this level in the near term. Okay, even though currently also, if you look at the monthly time frame, we have a new bullish breaker. Price took out the low, price took out that high, creating that shift of market structure. This level, you can also call it an area of resistance that's turned support. Institutions will most likely go mitigate this bullish breaker before they trade into the level above. Then on the weekly time frame, we had seen the dollar create, higher high expansions, higher low retracements, higher high, higher low. Remember, in a bullish order flow, we would like to see larger bullish expansions and smaller sell retracements. In a bearish order flow, we would like to see larger sell expansions and smaller, smaller buy retracement. So seeing that the dollar, has been bullish on the higher time frame, it gives me more interest to want to see the dollar create big, larger expansions and smaller sell retracement, and it's what we've been seeing on the weekly time frame. It's very bullish. So yesterday, I mentioned that I would like to see this guy trade into the bullish order block with the fair value gap, and we also outlined this level as an area of low resistance liquidity run, especially on the lower time frames that we did. This is the daily time frame, and on the daily time frame, we mentioned that price has been creating bullish market structure, higher high, higher low, because on the daily time frame we are looking at market structure, higher high, higher low, higher high, higher low, higher high, higher low, higher high on the daily time frame. Okay, so we identified this level as a mitigation area, which is also in confluence with the weekly bullish order block, and these lows, this low resistance liquidity, lows here, institutions will most likely trade into this level because the retail is seeing this as trend line. We are seeing this as a drawn liquidity because there's also an imbalance residing below these relative lows, so we'd like to see price trade into this before it pushes to the upside. So on the 1 hour is where we framed the setup, yesterday, and this was what I clearly said yesterday. I didn't even add anything on this chart. It's from the setup we had yesterday. I didn't even add anything. So as I just opened my chart and I saw, whoa, wow, amazing, I said, okay, let me come live and show you guys something. Okay, so look at the 1 hour time frame. Price started to create bearish retracement because on the 1 hour, that's where we see what price is most likely going to do, or where price is most likely, or when price is about to change structure. So because we had seen the dollar on the daily took out all external range high, and look at what it did. It took out the high again, created shift of structure, traded into the bearish breaker right there. You see that we created another shift of structure, expansion, lower, lower, low, another bearish breaker, price traded into the fair value gap right there at the breaker. You see confluence of the breaker and the fair value gap. Some of you need to learn the difference between a sweep of liquidity and a run on liquidity. Now look at this above. Price took out the high here with the body closing below the previous high here. That is not a run on liquidity. That is a sweep of liquidity. Price swept liquidity close below that previous low. And look at the other one here. The body of the candle has closed below the last low there. That is a run on liquidity. So when we have a run on liquidity and an underlying fair value gap confluencing with the breaker there, we anticipate price to retrace into internal range, fair value gap, order block, or breaker block. So price traded into internal range, fair value with the breaker block, that's confluence. Then we sold one more time, going into the end of the week, price consolidated, and yesterday, Monday, look at what I mentioned. Yesterday I said we were anticipating to see this guy take out this relative equal highs of last week. That's what we anticipated yesterday. We wanted to see price take out the relative equal highs and trade into the bearish breaker above or the bearish order block above. The 2 buy candles that we traded down consecutively by the sell candles, that is also a type of bearish order block. All right, and this is also a bearish breaker. So we measure 50% of the large range or the candle wick here. That is where you take your consequent encroachments for the breaker, because the breaker had a large candle wick. Okay, so when you measure about 50% of the candle wick right here, that's where to anticipate price action to, you can start anticipating price, and you can see price traded into 50% of that candle wick there. Consequent encroachment of that candle wick, that is it. It's an institutional level. Okay, there are many things, some of you will need to learn. Okay, then price expanded lower. You see, this is a challenge. That's why yesterday I mentioned, I said don't trade, because the impact is going to come from the fundamentals. Yesterday was Trump inauguration, so it's going to be very sharp. That was why, look at the gap on the dollar index. It's crazy, man. It's crazy. Look at the gap. Okay, and as at the time this was happening, I think there was also a smart money divergence on Euro USD, because the dollar had taken out the high, and we didn't see Euro USD taking out the lows as at that time. And I mentioned categorically that we may be seeing smart money divergence. The dollar is taking out the high, the Euro USD is not taking out the high. Look at this expansion into the drawn liquidity. Where's the drawn liquidity? Old low, fair value gap below, bullish order block, relative equal lows here. You see this double or what's it called now? Double bottom. That's drawn liquidity for us. We'd like to see this guy trade into internal range again, the gap here, trade into internal range, and one more time sweep below that low, trade into the drawn liquidity we outlined already on the weekly and on the daily time frame. That was it on the dollar. Very easy, very simple. If your analysis is not as simple as this, you are going to end up complicating your trading, and you're really not going to like it. So look at the setup on Euro. Amazing. Look at the setup on Euro USD yesterday. Wow. So remember that yesterday, I know some of you here are in the private community. That's why you're watching this. It will make more sense to you. Yesterday, I mentioned from this level, that this fair value gap specific, I said that we are going to see a smart money divergence, because as at the time the dollar was taking out the high, this guy wasn't taking out this low. So already I knew this is smart money divergence, crack in correlation, and it's going to make price action, even faster. So price traded into that fair value gap. You see that fair value by the right, fair value by the left. Again, expansion, price traded into the bullish order block below here. Again, expansion, still traded into the bullish order block. And finally, we said yesterday that this was what we are looking at as the drawn liquidity, the old high above, and also the relative equal highs. We outlined those levels, and price actually did it, traded into that level. All right, so today we may see this guy take a sweep on this low again and push one more time to deliver into the drawn liquidity above. Then we also did analysis on gold, and it was interesting to also see gold played out perfectly. Look at the analysis on gold yesterday, man, on the 1 hour. Remember yesterday we were anticipating a buy on gold from this bullish order block here. After price took out the low, created an expansion, then I told you guys I'll be buying from the bullish order block here. And what was the drawn liquidity yesterday? We said that old high. And guess what? Gold delivered perfectly into the drawn liquidity above also. Okay, guys, this thing can be hacked. You can understand it. All right, so some of you were confused yesterday about the other block I outlined here, and most of you are used to identifying order block as the last sell candle that I was traded through, just as in this case here. And I answered that question by saying, no, that is not just an order block. An order block is also the candle with the largest body, or one or more sell candles that were readed through by one or more consecutive candles. So look at all the candles here, we consider them as one candle. All the consecutive sell candles, we look at them as one candle, especially because this is the candle with the largest body. And look at how they were readed through by consecutive buy candles. This is the bullish order block, price traded into that level. Boom! That was the entry, and we delivered into the drawn liquidity above. Guys, you need to up your game this year 2025. Do a lot of insights, do a lot of research. Make sure you have a proven strategy that you are trading with. If your strategy is not proven, you're going to lose money. And sometimes I wonder why most of you would rather wait until you lose a lot of money before you come back to learn how to trade. You know, a student reached out to my friend the other day, crying about how he was in about $48,000 drawdown on a life account. This guy funded $50,000 life account and was in a $48,000 drawdown. That was when he reached out that we should help him. And I'm like, bro, how do you want me to help you? You funded $50,000. You didn't reach out to me when the account was 50 and was in good shape. The account is $48,000 in drawdown, not proprietary account, life account. Now you're reaching out to me. How do you want me to help you? For real? We had to still, proffer some advice and counsel. I told him to close some of the positive trades that he had. He was selling gold and gold was massively buying. He was buying and gold was selling. So we had to still be able to help him manage the situation because the situation was really terrible. And that's how some of you are so unwise. You rather wait until you lose a lot of money, then you now start scouting for money to pay for mentorship. Nobody does that. The reason you pay for mentorships is because mentorship gives you wisdom without pain. All right? Well, no matter what we say, some of you will still have to lose money before you get the wisdom from what we're saying. Okay, my friends, so what am I expecting on gold? Again, like to take a look at the daily time frame. And of course, you can see that the daily is still very bullish, and we're looking at this as a drawn liquidity. So on the 1 hour is to frame the setup. We've created an external range high. We would like to see price action trade into internal range. You see this fair value gap that is confluencing with this high here. This is more like a breaker, so I'd like to see this guy trade into that breaker or this bullish order block right here. Okay, the bullish order block that is gently sitting here, and or this breaker with the fair value gap here. Price took out the low. You see that? Price took out the low. Shift of structure, that's the breaker. So price will come into this level. Then once we see a 5 minutes or 15 minutes confirmatory signature, we buy into the drawn liquidity above. Guys, those of you who have been reaching out to me to join me on one-on-one mentorship, there's a link on the description of this video. Don't forget, you can still reach out. You can join me on one-on-one private mentorship before our website for the regular mentorship is available. Of course, the regular mentorship is regular as the name implies. If you are looking for a deeper insight into the market, deeper understanding, deeper relationship, and you are looking for a close, mentorship where I get to literally follow up what you are doing and ensure you are accountable, just so that we can improve your trading as fast as possible. If that's what you're looking for, then you should reach out to the link. You reach out to my personal assistant, and they'll put you through on how to sign up and join me on one-on-one mentorship. And once you do that, I guarantee you your trading, of course, is going to improve. Aside that, if you have questions, you can as well just drop it on the comments. Just drop it on the comments. Let me answer a few questions before we call it a day. If you have questions, drop it in the comment section. Let me see the ones I can answer, then we call it a day. Thank you for joining. I can see a lot of you from Kenya. Thank you to my Kenyan friends. Portugal, thank you for joining. Michael from Abuja, thank you for joining. Someone is asking, is January a good month for trading? So there are actually about 3 months you should lower your risks or totally don't trade. The month of August, the month of December, and the month of January. The month of August, because banks are going on holidays, so most times the month of August comes with a very small price delivery and much of candle wicks, very small price delivery and too many candle wicks. It's called whipsaws. We see whipsaws, a lot of whipsaws in the month of August. Likewise, the month of December, because the month of December is the month institutions are usually doing profit taking. So because they are doing profit taking on doing their positions, all right, to cap out the year, so the market is going to react sudden and faster. It's going to come also with candle wicks, a lot of candle wicks, and most times the market usually goes into consolidation in the month of December. All right, we know these things because we study what we call seasonal tendency, and from seasonal tendencies you can know what an asset can do from what it has been doing in the previous years using data of about 33 years, data of 15 years. So we use these things to derive, what an asset is most likely also going to do subsequent years. Then in the month of January, because it's the month for accumulation of contract, and institutions are still accumulating contracts for the year. All right, so that is why price is going to be very unstable in the month of January. But as the month is getting to a close or to an end, the market is going to stabilize and normal price action resumes. Okay, so that. I've answered the question. Someone is asking me to repeat gold. No, I won't repeat gold. Instead, after the session, I think you should. After the session, you can rewatch the video and get clarity on what you are looking for. Okay, my friends. So basically, that is it. In the absence of anything, I would like to call it a day. Okay, I like to call it a day. Till next time, wish you good luck. Good trading. Stay safe.